Namaste and welcome to Online Trade Academy Trading Series. My name is Darek Zelek. I'm the Senior Instructor for Online Trading Academy. Today, I'd like to talk about intraday setups with what I call a 35-minute cycle rotation. It's an interesting concept, and as a trader for the last several years, I have noticed there are some time elements into the market from the intraday perspective. What really this is that 35-minute cycle rotation? Well, when I intraday trade, I often observe that market has this cycle rotation. It rises up for a period of time and it gives us a pullback. And the same thing happens on a drop. It drops for a period of time and it gives us a pullback. So what I have observed is that many times, say market is in a locked-in channel, okay? And very often what happens, we are waiting as traders for some kind of a breakout. Well, if price does actually break out at that point, and let's say I missed the trade by my first 5 minutes, maybe I'm not so early on this breakout, no reason to worry. All I have to know is that, you know what, since this is a first 5-minute breakout point, I can expect for the price to continue perhaps for about 6 to 7 candles for this breakout point. Now after that 7 candles, what typically will happen is price is going to pull back. So this typically will last for about 35 minutes as a minimum price structure. So therefore, I'm looking for about 7 candles of price movement to the upside. Sure, you may have 1 candle red, but typically you will have following candles following through that 35-minute cycle. Sometimes it can extend to 40 minutes. Is that also true for selling? Yes. If you have a breakdown to the downside, the same thing will be true. If price is selling for about 35 to 40 minutes, you don't want to be entering shorts anymore. If anything, you want to start covering your position because typically you're going to get a rebound. And that rebound very often is about 38% in retracement before any additional moves will take place. So let me show you on the charts, what do I mean? Okay, so since I am going right into charts, I know a lot of times I reference things into Nifty. But the reason why I do this, it's because going to general market typically validates the general trends, and basically the averages work out better in the general market. But I can go to ICICI Bank as well just to demonstrate that 35-minute cycle rotation. And it really doesn't matter which stock you choose. As long as it's relatively liquid, typically this will work. Now again, keep in mind this is a general term and reference point. So when you are intraday trading, and I can point out here, so when the market is declining and you think that perhaps our price is going to decline, here, so take a look, do the count, 5, 10, 15, 20, 25, 30, 35 minutes. So after a decline of 35 minutes, and price is at or near support level, right, which we call basically demand area, this should be a pretty much a finalization of this move. Now, sure, price can maybe break slightly this level, but if it does, do not get invited on the shorts. Okay, if anything, you're thinking probably at this point there's going to be some reversal point. And as you can see, even though there's a breakout here, price is not able to hold this level. So that's just one idea how I look at this. In terms of breakouts, if the breakouts happen after 35 minutes, I'm not really keen on taking these breakouts because I know they're not likely to survive. Okay, and same thing here, when price starts to drop, look at this, 5, 10, 15, 20, 25, 30 minutes. That's your typical cycle. Now look at on this one as price goes up, 5, 10, 15, 20, 25, 30, 35. So it actually pushed for additional 2 candles, and then it gave us that correction. So as you guys can see, very often once you have this 35-minute cycle rotation, now this is really not so much true on the just sideways move, but even take a look at on this one. Price gap down and it started to increase in value. So 5, 10, 15, 20, 25, 30, 35. So this is basically 40 minutes. This is our 35th minute, and then look what happens. So 5, 10, 15, 20, 25, 30 minutes. So it's nearing that 35-minute cycle, and therefore we should be expecting some selling or the opposite move. So for those of you that intraday trade and you take breakout trades, before you actually take your breakout trade, I would advise that look at your time frame before, how long has price been increasing or declining, and if it has been over 40 minutes, I would be very careful on taking that trade. Okay, so as we have demonstrated, for those of you that provide or do trade intraday setups, be very careful of these 35-minute cycles. Watch for them. Understand that if you take a breakout trade, the question is, has the breakout just started, or has the breakout been in a process after a 35-minute cycle movement? If the answer is, if your price have been moving in that direction for 35 or maybe 40 minutes, you know what? Just say thank you and pass on the breakout, and if anything, look for possible reversions. So with that, I hope you guys will take this into your own trading, and I'll see you guys on the next series.